7 questions advisors hope you don't ask. Ask these questions before you pay an advisor 1% forever. This short video brings some clarity to a major financial decision, whether you should hire a financial advisor. I was honored by Financial Planning magazine to be on the cover of their retirement issue. I help people retire for 20 plus years. I go beyond money. It could be a time of rebirth. There are so many avoidable regrets to navigate, however. Question number 1. How do you make money when I'm not looking? Commission-based financial advisors are transactional, and that works for some people. They get paid when you buy something. In this video, I only address tough questions for advisors who are not paid on a transaction basis. Advisors, you pay a fee for services, not purchases. Fee-only financial advisors do not receive commissions. They only get fees. Maybe they're paid $300 an hour. Maybe they'll do a financial plan for $5,000. They may charge you 1% of assets under management, AUM. If you have $1 million in your portfolio, you pay them 1%, $10,000 a year. Usually you pay less than 1% at higher levels of AUM, and they will likely have portfolio minimums. There can be subtle conflicts of interest for fee-only financial advisors. Note that small hidden incentives can quietly shape big decisions. Most people only ask, what's your fee? The big follow-up question is, are there any other ways you are financially motivated beyond your disclosed fees? What isn't disclosed, unless you ask? Let me give you a few examples. Maybe there is a fee split with an insurance agent on annuities or cash value life insurance. If an advisor is fee-based, they can receive both advisory fees and commissions, getting 1% assets under management plus commissions. Did you know fee-only and fee-based are not the same thing? Does the advisor get free tickets to ball games from product people whose funds happen to end up in client portfolios? Does the advisor get client referrals from attorneys, insurance agents, and CPAs who may have a reciprocal referral relationship? If you ask the advisor, should I pay off my $200,000 mortgage? Will they objectively advise you if it costs them $2,000 a year in 1% of AUM fees? Don't get me wrong, there are lots of financial advisors who rise above conflicts of interest. It's not always easy to find them, however. And remember, you should find them, not the other way around. Those free dinner invitations you get in the mail may not be free. Objectivity drives trust, and trust is everything when your financial life is at stake. So who am I? Why should you trust me in this video? I founded a master's program in financial planning. I've been a retirement advisor for 30 plus years and an educator that whole time. In Massachusetts, I was a financial planner of the year a couple years ago. Worth magazine listed me for 10 years in a row as one of the top advisors in the country. I have a website, timemoneyandjoy.com. I try to also address the non-financial aspects of retirement. I'm very proud to be a partner in Frank and Flanagan. We are a fee-only advisory firm. I have a book out on Amazon called Your Encore. Again, really trying to tie all the non-financial aspects together for you to have the best what's next. In my heart, I consider myself a consumer advocate, always on the side of Main Street as opposed to Wall Street. Fun stuff. Second question. Am I getting a custom plan or a model with my name on it? Investment advisory firms scale using models. That's not inherently bad, but you should know what you're actually getting. Is it about saving them money through being more efficient, or about tailoring your portfolio to your needs? Let me give you some examples here. If outside their model, will they work with your existing investments? Is your level of understanding portfolio strategy different from the other clients? Is your level of patience different? Is the model designed for a Rip Van Winkle who slept for 20 years and rarely looks at their portfolio? Or for someone who nervously looks at their portfolio 10 times a day? Will they factor in investments they don't manage, like your 401k plan at work? Do your personal financial planning projections that they hopefully create, do they line up with your portfolio and your future? Will they simply tell Pete in the back office, just put these new clients into our standard 60-40 next? One size doesn't fit everyone. There's a big difference between tailored advice and standardized portfolios with slight adjustments. Question number 3. Would you ever tell me not to hire you? This might be the most important question on the list because not everyone needs an advisor. Maybe you're a disciplined investor. Maybe you have low complexity. Maybe you'd be fine all in CDs. Maybe you should do it yourself with low cost, low tax ETFs, exchange traded funds. If an advisor can't clearly describe who shouldn't hire them, they may not be objective about whether you should. I have another YouTube video entitled Do It Yourself or Hire a Financial Advisor. Better yet, I have a workshop that's listed at timemoneyandjoy.com. It's also in the below this video. I'll give you a very clear, no pressure, interactive opportunity to help you decide based on your situation. And if you go to my website, Time, Money, and Joy, I think you'll find a lot of other helpful resources. Favorite TED Talks. I talk about choice management, your happiness, etc. Question number 4. When the market crashes, how many other clients are competing for your attention? Everybody feels well served in a calm market. The real test is stress. How many clients per advisors are there now? Are they already at capacity? What if history rhymes? Remember 2000 to 2002 when the internet bubble popped? 2008, the great financial crisis? When COVID sadly hit in March of 2020? Imagine the advisor has 100 clients right now, and we have a major event. Who gets called first? Are you a large fee A client? Or are you lucky to have anyone answer the phone if you call, a D client? Will they tell you whether you're A, B, C, or D? Typically, that's an internal classification. Will their message simply be, at these stressful times, stay the course? It's certainly a lot easier for them. Is it best for you? Remember, you're not hiring an advisor for the easy years. You're hiring them for the hard ones. Question number 5. Do you follow your own advice? This isn't about copying their portfolio. It is about an alignment of interest. What do they really believe in? They want to see your portfolio ask to see theirs. If they don't believe in it enough to do it themselves, why should you? Also, they'll ask about your retirement. Well, what about theirs? Will you get pushed down to a junior advisor when they call it quits, if not sooner? Is the big national trend for owners to sell to private equity-backed national firms a good thing for you? Is bigger better for you? Clearly, there's some benefits. There's also some concerns. Number 6, how do I know you're actually worth your fee? Notice I didn't say performance. That's only one piece of the puzzle. Do they objectively help you with non-portfolio issues? For example, if you ask whether you need long-term care insurance, do they have a commission on the line? Many people can self-insure. Will they actually do a written financial plan and update it periodically? Do they collaborate with your CPA and your attorney, tying your plan and your portfolio to minimizing income taxes and estate taxes? Do they ask for a copy of your tax return every year? A big issue is, can you navigate the next bear market alone? Investors often self-destruct. If you paid this fee for 10 years, how would you know it was a good decision? What would your net worth be in 10 years, considering cost, taxes, your actual goals, and the value of your time? And did they give you peace of mind along the way? What won't you help me with? Every advisor talks about what they do. Almost none are clear about what they don't do. Will they create an estate planning flowchart so your family clearly understands just what happens when somebody dies? Will they find the best 529 plan in the United States for your children and grandchildren and handle the paperwork and select the investments? Will they suggest gifting to family or charity? There are lots of related tax complexities. That means more work. And when the money goes out the door, their AUM-based fee drops. This can be the same issue with Roth conversions. Extra work, lower fees. You don't want to find out the gaps after you've already hired them. So which question surprised you the most? Now here's the reality. Some people should absolutely hire an advisor. Some people are better off doing this themselves. Most people don't actually know which category they fall into. That's exactly why I created this additional video on YouTube, Do It Yourself or Hire an Advisor. And it's also the reason I'm hosting a workshop called Do It Yourself or Hire an Advisor. You will get a clear decision framework when do-it-yourself works, when advice adds real value. How do we evaluate advisors properly? Where to find trustworthy advisors? We answer questions like, do robos make sense for you? Maybe AI can save the day? If you're trying to make that decision, I'll walk you through it step by step. You can check out the details below or go to timemoneyandjoy.com. Let's be careful out there.